Okay, so I'm going to show you how an assumable mortgage actually works on a real listing. Okay, so I'm going to share my screen. All the other videos are not useful. This is going to help so much. Okay, here we go. So, so say there's a property. This one, it's 460 is the list price. Okay. 2816 Tobias Lane. It's in Aubrey, Texas, 76227. And for the agents, MLS says FHA assumable. Okay. So what happens? So in MLS, it's going to have the financial information in there. So it's going to say assumable qualifying. So the new buyer does have to qualify for the assumption. Okay. The payment, the current payment is the principal, interest, taxes, and insurance. And the balance for the seller is 292,421. The current servicer is Lakeview or Loan Care. It's the same company, but the servicer is who who the seller is going to get an assumption package from. And that is who the buyer is going to go through for the loan. So the buyer, is not going to go through their current mortgage person. Okay, I'm going to put myself here. So they're not going to go through their current mortgage person. They're going to go through the current servicer. Okay. So in this case, the balance is 292, 421, but the sales price is 460. So there is a gap there, right? So we're gonna have to get a second lien, or they're gonna have to have the difference in cash. Okay. So on this one, the rate is 3.5%. And let me see if I can do this. So yeah, the rate is 3.5% right here. And the PITI, okay, is 2410. Okay. The origination date of this loan was 5/21 of 2021. Okay. So rates were low. And let's see what's next. Okay, so this is from the seller's mortgage statement. Okay, so this is where we got the information for MLS. They probably paid the taxes by now. The maturity date on this loan is June 1st of 2051. So keep that in mind. And then we see on a fixed rate loan, the principal and interest never changes, but the taxes and insurance could change annually. So the whole payment's not fixed, but the principal and interest is fixed. Taxes and insurance will change annually. Okay, so in MLS, you can see that this one was built in 2020. He was the first owner, but there are also HOA dues. So $595 a year, divide by 12. That's what they're going to use for that. Okay. So in this case, because if you got a new loan right now, say we close in January of 2025, okay? So January 2025, this loan already has been going. He's already made 42 payments on this. So you are getting the benefit of not having to make those additional 42 payments, because this one is going to mature 6/1/2051. Whereas if you got a new loan and qualified for this, and you closed in January of 2025, then your maturity date would be January 2055. Okay, so there's almost four years there, 3+ years where you don't have to make a payment. So that is another benefit of a reverse mortgage. I mean, I'm so sorry, of an assumable mortgage. So $59,000 that's not coming out of the buyer's pocket. Okay, so I just took those two numbers, and that is the 1406 is just the principal and interest. Okay, that's been made. Okay, so what do we do if they don't have the difference? So if they don't have the difference, we have a second lien lender. This is in North Texas. They do all of Texas. This is something that we can do. So see how it has the loan to value of 95 or 90. So the people are still going to have to put something down. So if they put 5% down, which is the most they can do, we're going to build this rate out. Okay. I'll show you what we actually do to build the rate out. So say they have a 700 plus score, we're going to have 5% down. So our base rate is 7.5. And then we're going to look down here at their adjustments. Okay. So there's an origination fee for the second lien. And I'll show you at the bottom what it's going to actually be. But on a second lien, you have an option to have the term a 30-year amortization due in 15 years. So that is a balloon, okay? So we're going to amortize it over 30 years, which will be the lowest possible monthly payment, but it's going to be due, aka they need a refinance before 15 years. Or you can do a 20-year term, but the payment will be a little bit higher depending on what your situation is for your buyer, okay? So there's an extra quarter to the rate. So now we're at 7.75. And then the other thing, they might have a visa or something like that. We'd have to know each borrower. And then add a half a point to the rate if we're working with a first lien that's being assumed. Okay. And it does say this is going to have an origination fee of $650. And these rates are subject to change daily. So please note this is a snapshot of a moment in time, and this is subject to change. Okay, so building this out, we have 7.5 for the base rate, a quarter for the term that we want the lowest payment possible, and then we have a half a point for an assumable rate. Okay, so we're at 8.25 on this with a $650 origination fee. Okay, everybody's with me so far? Okay, so we're going to look at what is called a blended rate. Okay, so I put this second lien in here. So at 95% combined loan to value, we would need a second lien of 144,578. Now the buyer might have sold another house and they might have that money, or they might just have that money, and they don't need to do a second lien. But if they don't have the money, they'll have to come in with 5% of their own money, or 10%, whatever they have. And this is the scenario based on 5%. Okay. So I did the term on the second and 30, but we know it's a 30 due in 15. Okay. So down here, what it shows for the blended rate, and this top one didn't really calculate correctly. That should have been the 1406.90. But whenever I put the loan amount in, it amortized it over the time that I had. So this is a little bit wrong, but I want you to see this just so that you can see how we do this. So the payment on the second lien is going to be $1,086.17. And please remember, these are all estimates. It depends on the credit score. It depends on everything. The borrower, this is just one scenario with perfect credit, okay? The blended monthly mortgage payment, okay, and this is just the principal and interest, it's just these two things, is going to be $23.99. So the blended interest rate on this is 5.07. So even though it's 8.25, we have a 3.5 rate. So a portion, the majority of the loan is going to be at the 3.5%. And then the second lien is going to be 8.5%. But if you blend them together, that's still a 5.07 rate, and that's better than a market rate today. And rates change daily. So here it is. Here's the principal and interest from their payment, 1406.90. Their escrow is $1,003.80. The taxes should be the same, but your customer, the buyer, is going to get new homeowners insurance. So this could change a little bit if they have more claims. Uh, you know, um, And then the second lien, we said 1,086.17. And like I said, I'm assuming a 740 credit score. So what I did was I added these three things together, and that came up with the 34.96. So that would be the payment. So I also looked at a 95% loan with about a 6.625. And this is give and take, depends on how many borrowers has MI, it's going to be a little bit off, but just a general idea of what it looks like. You're going to save $410, so $411 a month by doing this assumable mortgage. That's a big deal. So not only did we save, let's see, let's go back here. We saved $59,000. We saved 42 payments, right? And they're going to save $411 on a month. Okay, big deal. It's a big deal to help people qualify. So the second lien lender, I'm going to put this up here. You can always contact me as well. But the second lien lender is Nancy Struthers at Certified Funding. They're in Dallas here with me. I don't get anything from them, do the loan. You actually have to do the loan on their website. I can hook you up with them. But this is a beautiful, immaculate house. It's still available. So if anybody's interested, please, put your email in the chat or contact me. My phone number's on my bio, and I'd be happy to talk to you. All right. Thank you.